Hello everyone, welcome back to Upside Down Data. Today I want to give an update on our risk indicator for EGLD. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So the last time that I gave an update about EGLD was actually when we launched our UDPR risk indicator for EGLD back on October 30th. So now that we have a couple more weeks of data to look at, I wanted to give an update and see let you know what the UDPI has been thinking about EGLD more recently. So if you're returning to the channel, you're quite familiar with this type of graph. In brief, what I'm showing you here is the price history of EGLD over time. The dots represent days, and the color of the dots corresponds to the output of our risk indicator. So -5 is low risk, 5 is high risk, and price is in logarithmic form for this graph. And so what you can see is that over time, the UDPI has done a great job of identifying these low risk zones here where historically acquiring EGLD during those times has been advantageous, as well as these high risk points here where kind of the upside potential has been tapped out and where maybe kind of taking profits may have been advantageous. So let's look at where we are right now. So kind of going back a few months into the summer, we can see that the UDPI identified the summer as being a really great time to be acquiring EGLD. Actually, it was saying this was a fantastic time to be acquiring, and indeed that's what we've ended up seeing. So like, prices exploded. We put in new all-time high. We actually just put in a new all-time high just in the last couple of days again here. So buying EGLD here would have led to quite a positive outcome, quite high returns on that investment. So where does the model think that we are right now? That's, I think, the question that we all want to know. It's not really useful to think about the past. Where are we right now? What does the model think? And what you can see is that what the model kind of did is that after EGLD had put in kind of this new all-time high from the spring here, they identified this being kind of high risk, and indeed we saw this kind of correction and sideways action following that. But you'll see that the UDPI was getting increasingly more bullish essentially on EGLD during that time. You see that the risk level was cooling off down into these kind of levels down here, this yellow, and then now we put in this new all-time high, so the UDPI has ticked up a little bit again to kind of reflect that upward movement in price more recently. But I think then the question that we all need to ask is, how do we interpret this value, right? We're sitting, right around here, a little bit below 1 right now on the UDPI. What does that really mean? And I think it's kind of a misconception, I think, that I've seen when sometimes people have been interpreting this data, is to think that we're trying to spread FUD or something with this information here, that we're trying to, spread all this bearish sentiment because it's above 0. That's not at all the way that I interpret this. And something that Joe and I talk about with the UDPI, and I think is important to mention here, is that you need to interpret it in the context of your broader thesis of where we are in the market cycle and where we think we're going to go in the market cycle for crypto. So if you think that we're in the next leg of the bull market, and here at Upside Down Data, that's our personal opinion, we think that the evidence seems to lean more on the bullish side than the bearish side right now, just a combination of on-chain data as well as kind of historical trends and technical trends. We just think that a more bullish narrative makes a little more sense now than bearish. And so if that's your thesis, it might change the way that you interpret a UDPI level that's around 0. And so again, around 0 means that the upside potential is about the same as the downside potential. But if you think that the market is going to trend up over the next coming months, then you're probably going to think that it's unlikely for this downside potential to really come into play, and you might think that this upside potential is more likely. And so then you'd probably interpret a value of 0 as not being particularly bearish at all. In fact, you might actually see that as being a bullish thing, the fact that we're in an uptrending market and there's still that much upside potential left in the asset. We're only at 0. We're not at 4 or 5. We're not at 3. That's a bullish indicator. That would be a bullish idea. So if that's your thesis, if that's where you think the market's going, then a score of 0 is not anything to really be afraid of, or even a score of 1 might not be something to be particularly afraid of. But on the flip side, if you had a more bearish thesis, so let's say you think that the crypto market is going to trend down over the next coming months or years, we're about to enter a new bear market, for example, then your interpretation of 1 or 0 is going to be quite different. So for example, if we go back to here in EGLD's history, if you look at this 0 down here, when we hadn't really shown that we were entering into a bull phase, and we had the big crash in March 2020, if your thesis at this point had been more bearish, getting up to these levels would not have suggested that getting into EGLD at this point was necessarily a good idea. You'd be wanting to wait for these lower levels. If you think the market's going to trend down, this is really the point you'd be waiting for before buying in. And of course, that kind of triggered the move into the upside. But if you're in the middle of a bull run, so let's take this run here back coming out of kind of Q4 of 2020, kind of into the late winter and early spring. If you're in here and you have the thesis that we're in a bull phase, buying in right here at yellow, that's pretty darn good. You would have been doing quite well if you had bought in right here. And again, it would have meant a different thing to you. Zero here might not be such a great thing if you think the markets might keep trending down. But a zero here, if you think the market's going to be trending up, would have been a very good time to be entering EGLD. And historically speaking, that was the case. Let's take another example here. So coming into the late spring, before we got this massive correction, again, it went down to zero. But now, again, you need to take that into context. And one thing that was happening around this time, if you were in the market back here, there were things that were going on with Bitcoin that were suggesting that the momentum was really kind of falling off the market and that other big moves to the upside might not be as likely as they were kind of back here before Bitcoin had gone on a run. So, if you follow the crypto markets, you're probably familiar with the idea that really what tends to happen is Bitcoin oftentimes moves first. Bitcoin will go kind of parabolic, put in a new big definite new high, a very confident new all-time high from its previous all-time high. And then Bitcoin at some point will kind of slow down. It'll have a bit of a correction. And it's usually after that correction where altcoins go nuts. And that's what happened back here coming out of Q4 and into the spring. So really, Bitcoin went absolutely nuts in December and then kind of slowed down a bit in January. And that's where we saw these big, really explosive moves from a lot of altcoins follow off of that. EGLD did about up to a 10x move coming out of here up to here. But after, historically speaking, Bitcoin ended up getting up to over a 4 on the UDPI back then in the spring when it had put in those crazy moves. And historically speaking with Bitcoin, after it's put in that kind of risk level, there tends to be a correction that follows. It tends to have a pretty big drawdown before another bull move can move. And so taking that into context then, when we got all the way over to here, closer to May, April, May, when things started turning yellow again, Bitcoin had already put in a super high risk level. There were bearish divergences showing up on the daily RSI that was really showing the momentum was leaving the market. This would not have been a time that I personally would have seen as being a particularly bullish time to be entering the EGLD market. And of course, it did put in a little bit more upside potential following after that. But then, if you would have missed your exit, then you're stuck holding down into here, and you wouldn't have broken even until many months later. This would not have seemed as such a positive sign. And so then the idea is that right now, when we see this similar kind of risk level to what we've seen in some of these moves in the past, we need to just think, what do we think this is more similar to? Do we think it's similar to this time in EGLD's past? Or maybe it's more similar to this time in EGLD's past, or this time in EGLD's past? And that's how you should be interpreting the UDPI output, is relative to your thesis of where you think we are in the market cycle. If you think we're getting ready for another leg up, then perhaps interpreting it more like that is appropriate. Whereas if you think we're more of in this movement, where you think the momentum is leaving the crypto space, maybe you'd want to be more cautious. And it's really up to you to form that thesis. You need to have a thesis. You need to have an idea of where we stand in the crypto market, and that's going to determine a lot about how you interpret these outputs. Now, again, for me personally, this is not financial advice, it's just my own opinion. I think we're kind of more in a similar territory to here or here than we are to something like this right now. Bitcoin has put a new all-time high, but not a super convincing all-time high yet. It doesn't seem like we've kind of entered that manic phase in the market yet. We haven't really seen that kind of big explosive move we'd expect from Bitcoin for that next leg to really be happening. And I personally think we're more likely to enter the bullish phase. So personally, I'm seeing this more as a bullish signal rather than bearish. But again, that's just my opinion. You need to form your own idea and your own opinion of where you think we are. So that's not financial advice. Form your own opinions and interpret the data accordingly. So to flip over to a different view of the UDPI output, just to look a little bit more where we are now. So this is just the UDPI output plotted over time with high risk and -5 low risk. So you can see that the UDPI was actually trending down for EGLD for a while, but now that we've kind of put in a new all-time high, we've kind of broken out of that range a little bit that we had been in. Now the UDPI is starting to reflect that, and it's suggesting that EGLD had realized some of that upside potential, which it did. It ended up putting a new all-time high. It ended up realizing some of that upside potential. And so that's where we stand. And again, as I mentioned, the way you interpret this now needs to depend on your thesis. Do you think that EGLD is just getting ready for another massive explosion to the upside? Like for example, Elrond is seeing more DeFi development, more DFs being built on it. If you think that that's going to be this kind of fundamental tailwind that might lead to a price appreciation, maybe that's a reason to have a thesis for the move to the upside. Or you could have a different thesis. You could think that the crypto market might be entering a bear market soon and that you should be more cautious, and that would also change your interpretation. So it's up to you to form what you think that thesis is. I'm just here presenting you what the data suggests. What the UDPI is, the way you interpret it is up to you. So I want to also talk a little bit more about where we are in the context of where we were when I put out the first video on EGLD. And so that video was put out on October 30th. The UDPI at that point was at 0.24, and the price was sitting down at around $253. And as I record this now on November 14th, this is where we stand. So the UDPI is at 0.9, so it is elevated, but nothing too crazy. And again, coming out of Q4 of last year, or kind of January of last year, EGLD was able to put in as much as a 10x move off of higher levels of risk like this right now. So don't interpret 0.9 as meaning that EGLD can't go absolutely nuts in the future if it wants to. It absolutely can. But also don't take this to mean that this is a historically necessarily fantastic time to be acquiring EGLD. We're not in the summer anymore. We're not, in November or October of 2020, where it was down in these deep kind of green zones here. We're up here. And so really what the UDPI is suggesting right now is that overall, the downside potential does outweigh the upside potential. But again, if your thesis is that this upside potential is just more likely to be realized, or it's likely to trend up, then you would be more concerned just how far do we have to move, and we still have quite a bit to move. At 0.9, we're not anywhere near these really high levels of risk that we've seen in the past that suggested that EGLD is likely to kind of slow down or just move sideways or correct off of those kinds of moves. Another thing I think is just interesting to note as well is if you just look at the price action from here to here. And so at this point, the risk indicator was suggesting a more favorable risk-reward ratio for EGLD at this point. And indeed, we ended up seeing about a 24% price increase from this point in time to this point in time. And so the indicator has adjusted itself to kind of reflect that move. And so, a more favorable risk-reward ratio, purchasing here, one would have seen about a 24% appreciation of their EGLD over this point, which I think is just interesting to note. Now, again, I think it's always a little bit questionable to read too much into kind of just a couple week moves with the UDPI. It's kind of meant to be interpreted over longer time frames, like a couple months, more macro kind of time frames than this. But I still think it's just interesting that it was suggesting a relatively equal risk reward, and then indeed it ended up appreciating in price, and now it's updated a little bit since then. So just to wrap this all up, I also want to show you kind of where EGLD stands relative to the rest of the crypto sphere. And as you can see, it's kind of hanging out in the middle relative to a lot of these. So it's not really low risk like things like XRP or ADA are right now, which I guess I should clarify. These aren't necessarily super low risk, but they're lower risk. They're below zero. They're negative. So just the upside potential outweighs the downside potential. And then EGLD's also, though, of course, not at the level that, like, for example, DOT is right now, where DOT seems to be kind of overheated, and it might need some time to either price correction or just a lot of sideways movement to really cool off, potentially. Not to say that DOT can't keep moving up, still does have room to move, but it just might be a little bit less likely to do that than some of the others. But again, the idea is that with any of these assets, it's really up to you to form your overall thesis of where we are and where we are with that particular asset. Do you think that upward movement is likely? And if so, that's going to change your frame of reference. A score of 0 or 1 is not nearly as scary if you think that the asset is likely to go bananas in the next few months and then get up to those really high risk levels. That's actually not that scary. But of course, if you think the opposite, if you think that the market's going to trend down, then an entry point at 1 is not nearly as beneficial as an entry point at those negative scores that we've seen in the past. And so that's where it's really up to you to form your own thesis. And as I mentioned, our thesis here at Upside Down Data is that we think it's more likely for there to be a next leg up in the bull market than not. But again, that's our thesis. It's up to you to come up with your own to figure out how you want to interpret this UDPI data that that's being provided by the model. So again, it's always having to be done in context of what you think, where you think the market is going. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.